Hello, I'm Aidan Wright, pricing analyst here at Mintec. I'm here to take you through what I've been hearing in the almond and peanut markets over the past few weeks. Looking first at almonds, the position report released on Friday showed strong sales throughout August, with 42% of the crop either full committed or sold at this point. This is unsurprising, as we've heard that low price have really incentivised demand, and we have heard of a lot of people getting cover for later in the year. However, the actual volume of the crop which is committed is significantly ahead of previous years. The harvest is ongoing amid the wildfires in California, and there is some mismatch between the initial strong expectations for this crop and the actual size grades that are coming through. So far, the most common grades which have been seen are in the 27-30 and 30-32 range, with larger size grades very limited. As such, we've seen some pet sellers pull back from the market and lower offers on some of these larger size grades. The Mintec benchmark price for non-Perel Supremes 23-25 FAS US was quoted at $2.25 per pound last week. Moving forward, currently prices are still fairly low and it will incentivise buying activity. However, if sellers are pulling back in the hopes that we might see rises for some of these larger size grades, then we could see a firming in the market and price rises moving forward. Later in the season, there are questions over whether or not this increased buying activity earlier is just eating into demand for later in the season. There is still a record crop that needs to move, and we could see some holdout and potentially some weakness later if this could be the case. Moving on to look at peanuts, in Europe, US and Chinese peanuts continue to trade at a significant premium over South American origins. The Mintec benchmark price for US runners 40-50 unblanched shelled was quoted at $1,950 per tonne on Friday. Obviously, this is more of an indicative price than anything else. At this point, the US harvest is ongoing, and while it's yet to kind of really get going in kind of parts of Georgia as people are breaking ground, and there is more and good quality coming on, currently it isn't in Europe. We are expecting to see prices decline significantly as we actually see US crops become available for European buyers, but currently it is still trading at that premium. There are worries for the Chinese crop that is currently being harvested, as the typhoons and flooding have potentially damaged crops in these regions, and the full extent of this is currently unknown, and we'll really have to wait to see as it comes forward. For the South American origins, we saw Brazil strengthen slightly again last week, with the Mintec benchmark price being quoted at $1,400 per tonne. There is actually limited crop now coming out of Brazil and very limited availability overall. Most of it now appears to either been sold or committed for movement later, and there's very limited actual offers coming forward for European buyers. From Argentina, we saw a slight rise up to $1,360 per tonne, in part due to this, though there still seems to be a decent amount of the Argentinian crop left, but there are questions over how far it will stretch before we see the US crop coming online and how much upward movement there is for later in the year. Obviously, as with all markets, a lot of what is going to happen in terms of pricing and demand is really dependent on COVID at the moment, and we'll have to see how second spikes and localised lockdowns impact demand. If you have any questions, feel free to reach out to me at pricing@mintecglobal.com or on the mobile number below. Thanks very much.